Jerry Yang is out at Yahoo as the management shakeup tries to jumpstart the search engine, and the IMF wants to increase its lending power by $1 trillion. Can stocks hold on to any kind of rally? I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. Let's get right to the futures. Scott, we had stocks up on Tuesday, but they couldn't hold on to those gains, but still managed to end in the green. Is that a warning sign, or is that in any way constructive?
It's a big constructive, but it goes with the thesis of 2012 where there's no conviction higher. We've had about 3 to 4 big gap ups that if you went to play the indices, you were definitely frustrated at the end of the day, but intraday, there was a lot of good stock action. This has been a stock picker's market in 2012. As the indices have been somewhat lethargic, the right place, right time has been the strategy that I've been using as we've been progressing as the new year began.
Now, you definitely had long positions on in the new year. Have you now added hedges to help yourself against these volatile markets?
At certain spots, I've been long only, where I've been long stocks and long the spiders, the OAHs, and some of the indices. Recently, starting, I'd say Friday, I started taking my long positions and hedging it with a diamond short overnight. Yesterday, I bought a little VIX because I saw a little bit too much complacency, so I'm trying to be net long, but intraday also, as an active trader, when things feel heavy like we did yesterday afternoon, I'm piling on some intraday shorts just to add some cash flow to my existing longs that I typically could fund by taking active trades during the day as well.
Well, let's go to the chart and see what level of support we might hit if we break this uptrend that we have been seeing.
Well, I want to show you the chart because I see 2 different patterns here, and I think we definitely
great.
should dissect it for everyone here. So if you go to the macro picture looks great. You have the low in October, another low in November, low in December. We then broke above this descending trend line, in mid-December, which gave us a nice little lift, and we've been having a nice methodical move to the upside. But what I'm seeing right now, just to iron out, just to show you, is I'm seeing an ascending channel here. Okay, if you take a look at this channel here, it's ascending in nature, and typically ascending channels break to the downside the same way descending channels break to the upside. So I think as long as it stays intact, I'm going to try and be net long. But if we were to start to break below, just say 1280, 1285, you could see a move, to continue this macro trend, just say up until here and put another higher low. But, I'd say at this point, short term, watch this ascending channel. If it breaks to the downside, you might want to, trim some more of your longs.
And so one sector I just want to hit on in terms of how you deal with that are the financials. They had a really nice run into JP Morgan's earnings. They've been the worst performing sector of 2011. But now what? As we're digesting these bank earnings, and they are very volatile, very murky and messy, was JP Morgan, unfairly punished for its quarter? Is Citigroup unfairly punished? Aren't there bright spots there at some point?
I think there was some bright spots after JP Morgan because we had that nice move from just say 32 to 37 in JP Morgan, and then the day after earnings, it held in okay, but then yesterday Citigroup came out and reinforced the fact that some of these earnings are definitely a little lighter than the street wants, and there was no bounce in Citigroup yesterday. So it's going to be interesting to see what happens with Goldman, which we'll talk about later. But as far as the XLF, you can see the same pattern here. XLF has this rising, ascending channel, so it's been a really nice move. Since early December, we talked about the January effect there. But if the XLF start to break below 1350, you could see some corrective type action to then retest this uptrend that's been intact since October. So short term, if we break below, just say 1350, you're going to see some more pressure on these banks. So I'm going to wait before I start to buy it back. But that was a good trade, for the first few weeks going into JP Morgan's earnings.
So then headed into Bank of America, which comes out with earnings tomorrow, what would you want to be doing when we're looking at this chart pattern that could get a little worrisome? Do you need to really lighten up headed into the earnings, especially once we saw those disappointing numbers from Citigroup? Although not all of it was bad, and we'll get to that in the longer show.
Well, the more we keep coming in, the more they're going to start pricing it in. So they tried to price in JP Morgan, they couldn't. Then all of a sudden they tried to price in Citigroup, they couldn't. So we keep going further down, then all of a sudden Bank of America will have already corrected, so it's not going to need a great report. And I think people are trying to stay long Bank of America. Just had a big move already so far this year. I'm not involved there. I think short term, if you want to take the trade, take the trade. Longer term, if you want to be long it for the year, just know that it's a tricky spot. There's a lot of problems out there, and you never want to chase excitement there because momentum in that name is hard to find.
All right, and we're going to talk much more about banks and also what other stocks Scott's going long right now in the entire morning call, so stay tuned.